AMD stock is usually overlooked as the winner in the AI chip market due to Nvidia's dominance in the space. But what if I told you that in a recent conference, Lisa Su, the CEO of AMD, mentioned that they are adding even more competition in the AI chip market. And it's not with their MI300, the MI325, the MI350, or even the MI400. It is a completely different AI accelerator. Also, let me say AMD stock valuation doesn't seem half bad to me. But you know what does seem bad? You still have not hit the thumbs up and the subscribe button. All jokes aside, in today's episode, we will do the following. A quick overview of the AI accelerator market. Number 2, how AMD is attempting to increase its market share in this space. Number 3, why I personally don't think AMD is an expensive stock. And number 4, we can't forget Nvidia. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, we're going to start off with the AI accelerator market. And to understand the AI accelerator market, we have to kind of understand the two main players in this space. So within this space, there's two solutions. There's the merchant AI accelerators and the custom ASIC solutions. So your merchant AI accelerators, these are the GPUs that you can kind of buy off the shelf per se, and they work for pretty much anybody, right? So the three big players here are Nvidia, which is safe to assume is pretty much the whole market. Then AMD. AMD is somewhere in there, obviously with their MI300. And then I wanted to be nice, but also showcase Intel with their Gaudi 3 platform. So see, these are the three players in the merchant AI accelerator space. Now, when we think about custom ASIC solutions, for those that are not familiar with custom ASIC solutions, this is the way big tech is designing their own chips to kind of help with some of their big tech AI dreams and some of creating their own AI chips. Now, the two companies that help here are Marvell and Broadcom, and I've done a video about them in the past. I'll probably post a link here where I talk about how these two players are really entering the ASIC space. Now that we understand how this AI accelerator market is, I also kind of want to just give a very top level overview of the difference between GPUs and or merchant AI accelerators and your custom ASIC solutions. Because everybody's always discussing how, look, custom ASIC solutions are gonna end Nvidia's domain, are gonna end the GPU market, are gonna end AMD's future growth opportunity. And that's not necessarily the case. So I wanted to show up this slide right here. And before we go any further, guys, I do want to say I want some feedback from you. In the past 4 to 5 videos, I have increased the amount of time I'm taking to make these videos. I'm creating a lot of visuals, and hopefully it's showing in the video and it's showing in the information that you're getting. But I would definitely like feedback from you if you're really noticing it, because if you're not noticing it, then obviously I have to find some more tweaks around there because I am spending a lot more time. But here, when we take a closer look at merchant AI accelerator, aka your GPUs or your data center chips from Nvidia, AMD, and Intel, the most important thing is they're highly programmable. They're adaptable to various tasks, which is very important in the AI space, as in the AI market, there's always a new AI workload, and the new AI workload might kind of do something different where you have to program it a different way. They're highly versatile because of that because they're so highly programmable that they can handle a wide range of AI workloads. Time to market is usually faster compared to kind of custom ASIC solutions, both because one, AMD, Intel, and Nvidia are kind of battling out against each other, so they're always trying to stay a step ahead. We know AMD and Nvidia have an annual cadence, and that obviously is time to market a lot faster. Innovation, obviously very similar because of that competition. There's very frequent updates and new architectures. We always hear how AMD and Nvidia are increasing their software solutions in this space, which at the end of the day is improving performance of their AI chips. Now, there is this big saying that goes, jack of all trades is the master of none, but that's not necessarily the case here for merchant AI accelerators. They are the jack of all trades, but they're also the master of a few forms of task. So GPUs definitely are the ultimate player when it comes to AI solutions. Now, if we look at custom ASIC solutions, this is more specialized. They're optimized for a specific AI workload. Their performance are very efficient for targeted tasks. I mean, if let's say you only go, the perfect example is if you only go to one store and you live in the same house for the rest of your life, you know exactly what's the fastest way, the most effective way, efficient way to get to that store from your house and to get from that store back to your house. Now, that would be a custom ASIC solution. Now, a merchant AI accelerated GPU is if you like going to that one store, but you're open to trying any new store that opens up. If you want to try any day, you want to go to a whole different store, a GPU would work better because it has that versatility to be able to handle all those different routes. So I think that's a great way to explain the merchant AI accelerator versus your custom ASIC. Some of the weaknesses for the ASIC market is flexibility and development. Obviously, because it's meant for one workload, it's not really adaptable to new workloads. And development takes a lot longer because obviously big tech, while they do have huge engineering teams, a full semiconductor company is just way faster in this. The great side is cost. You might have higher upfront costs to develop these AI chips, but if you're building them at scale, you're gonna definitely save a lot and a lot of money. So this is a one-trick pony, but if you definitely do that trick over and over and over again, you're gonna save a lot and a lot of money. So now that we understand kind of the difference between the ASIC and the merchant market and who competes in the space, I want to talk a little bit about the total addressable market. And in the most recent conference with AMD, there was an analyst that asked AMD what they thought about their AI Accelerator total addressable market that they forecasted late 2023, which was about $400 billion by 2027. Lisa Su, the CEO of AMD, mentioned that, hey, look, they actually think that over the past year, they feel very good about this overall total addressable market. And the main reason is we are still very early in the AI computing cycle. Now, within what we talked about, that accelerator market of $400 billion is not just your merchant GPUs. They believe GPUs will be the largest piece of the $400 billion total addressable market, but there will also be some custom silicon solutions with that. Now, to kind of double down here, Marvell, one of the companies that does the ASIC solutions, also recently shared what they see the total addressable market in this space. They mentioned for data center, accelerated computing is somewhere around $172 billion market. That growth is actually coming from the accelerator market, which is expected to grow at a 32% compounded annual growth rate. Now, obviously, their numbers are a lot smaller than AMD, but what I want to showcase here is that both AMD and Marvell believe that this is going to be a multi-$100 billion market, and especially in the accelerator space, and that is going to grow at some strong double digits on a compounded annual growth rate. Now, very similar to AMD, Marvell believes that most of this revenue is actually going to come from your GPUs, but custom ASIC solution is definitely going to have a space and it's going to be able to grow as well. All right, so now that we understand the AI accelerator market, and I hope that provided a lot of value. So if it did, again, make sure to hit the thumbs up and the subscribe button and let me know on the feedback of the video so far. I want to talk about how AMD is trying to enter this space. So in a recent conference, AMD actually mentioned that they can do ASIC too. So we're going to add AMD here to the custom ASIC solution market. And one of the analysts, the way we got to this information is one of the analysts was kind of talking about, hey, look, you guys are growing this data center GPU business pretty fast. You were pretty much zero last year, and now your guidance is about $4.5 billion this year. What do you believe is growing here? What do you think is executing really well? And Lisa Su mentioned that, hey, look, we had great partnerships with Microsoft, Meta, and Oracle to have adopted the MI300. What they believe they've done really amazing in the past 9 months is increase their progress on the software side. In some cases, they meant with all these advancements in software, there are certain workloads where they're even better than the competition, aka Nvidia, which they say is exciting. Now, what they also mentioned, and Lisa Su, is that she believes that there's not a one-size-fits-all in terms of computing. And so their goal is to be a high-performance computing leader that goes across GPUs and CPUs and FPGAs and also custom silicon as you put all of that together. So they think there's a lot and a lot of opportunity for AMD here. So I want to say this wasn't a true confirmation about the ASIC market for AMD, but Lisa Su starts to kind of put that into the analyst's mind. Now, one of the next question, we kind of get more confirmation. The analyst says, hey, look, many of your cloud customers have custom CPU and accelerator programs. Like we saw, Meta, Google, Microsoft are all designing their AI chips with the help of Broadcom or Marvell. Does AMD see this as a competition, or how does she see this space? And Lisa Su pretty much mentions that, hey, look, she doesn't see this market as a X or Y market. It's not a or, it's a and market. It's going to be both X and Y, being GPUs and ASIC solutions. So she believes that her job is to continue to evolve the roadmap of merchant GPUs as fast as possible, and that's why they have that annual cadence. But she does believe that custom silicon will come into play, and especially when it's going to go for solutions that they only need good enough performance, but where they're able to kind of narrow down the application, and you don't need a lot of programmability, like we've mentioned. If you're not upgrading your model every 12 months, in that case, it makes perfect sense to go into an ASIC solution. But she reiterates that the 400 billion accelerator market is going to be majority GPUs. And she also sees big tech developing their own chips as a partnership opposed to the competition. The main reason, AMD does have semi-custom capability, which allows them to help these big tech players build their own AI solution. I mean, this kind of semi-custom capabilities is pretty strong right now in the gaming console business with companies like Sony and Microsoft. And what they pretty much tell them is, hey, look, come use our IP and figure out how you want to make it different yourself. So we can see AMD is really thinking about entering the ASIC market. So now it seems like Lisa Su really got the attention of this analyst, and the analyst pretty much wanted to get a confirmation. He wanted to see if this is something that they might be able to see on the data center side. And Lisa Su pretty much said yes. She thinks that they're working so well with their IP investments and their partnerships, and there are definitely ways that we can do even more with our largest customers. So I think this is a huge growth opportunity for AMD. Now, I want to say, me personally, I don't think AMD is sitting at expensive levels right now. I've mentioned in previous episodes, anything below 150, I find AMD pretty attractive. Forward 1 year PE ratio is 28.21. And it's important to remember that these estimates on PE ratios are based on analyst expectations. And analyst expectations, what I believe, is pretty low in all their avenues, from the FPGA market, the embedded market, the CPU market, the server CPU market, and then the server GPU market. So I personally believe AMD has a high percentage of beating expectations, and PE ratios are a lot lower than this. The actual PE ratios are going to be a lot lower than this as they beat expectations. The second thing I want to mention is I personally believe AMD will really grow revenue a lot faster than expected due to solutions like this, where the AI market is evolving at such a rapid pace that new opportunities can come out of nowhere. And I don't think analysts are kind of forecasting that type of growth for AMD. So like I mentioned, for AMD, for me, below 150 is good for dollar cost averaging. But I would say strong buying points for me are $135 and $125. Levels we have seen about a week or two ago for AMD. When I did my video of my top 3 AI chip stocks, AMD made the list when it was at around those levels. So I hope you guys are enjoying the content so far. Now, before I end the episode and everybody thinks I'm an Nvidia bear after this video, I don't think that's the case. Like we saw, the AI accelerator market is pretty much going to be mainly merchant solutions, aka GPUs, and Nvidia is going to dominate. Now, I also believe that there's a hypothetical scenario where Nvidia also enters the ASIC market. If they're dominating in the AI accelerator market, why not dominate in the ASIC solution? I think Nvidia is going to be very selective when they do this. I think if they were to do this, it would be only to their very big customers, maybe customers like OpenAI or of that sort, companies that are going to order tons and tons and kind of ramp up tons and tons of AI chips. Now, there have been reports, and not reports that we've heard any more updates on, but in early this year of 2024, we started to see reports that Nvidia is going to pursue this 30 billion custom chip opportunity market with a new unit. And the reason I believe Nvidia can really much dominate in this space is in a recent conference, the Accelerated Computing Business Unit Vice President, Ian Buck, mentioned that the best architecture for inference is the one you actually train on. So if the best architecture is the one you trained on, and maybe you don't want to buy Nvidia's AI Accelerator Market because you want more of a specialized chip, then why not go with that architecture from that same player, Nvidia, and kind of just create your own AI chip. So this is why I believe Nvidia definitely has the opportunity to dominate in that space. And if they do enter in that space, it could be very bad news for Marvell and Broadcom. Overall, I am still very bullish in Nvidia, but I believe these recent updates has made AMD a very, very attractive company if they really do enter the space. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.